Investors and traders, welcome to the channel Market Chart Pattern. Today is 5th of January 2023, and I hope everyone is having a great day. So today was the final trading day of the first week of the new trading year 2024, and what a week it has been. And the markets, the financial markets, the equity markets in particular, they have been under stress. So we are going to take a look and evaluate, and I will try to make this video short. I will not go in too much details for this one, because we have the weekend coming up, and I'll do a longer video in which we'll cover a lot more in detail. As usual, this video is for educational purposes only, and it is not a financial advice. So let's take a look at the brief summary of different markets, how they performed. So here we go. That's the chart that we would like to go through. Okay, so today was also the FOMC, the non-farm payroll day, and we also had the ISM figure coming out. I believe it was ISM by PPI. Not sure. I think ISM. Do correct me if I'm wrong. And yeah, what a trading day it was when the non-farm payrolls came out stronger than expected. The market had a tremendous reaction. We'll cover in particular gold and the treasury bond markets as well. And then when the other economic news came out at later on, there was another really upsurge in the stock indices with that. However, in the afternoon, much like yesterday, we gave up a lot of the gains which we had gained in the morning. So there was a lot of action which took place in the treasury notes and bonds market. So we'll just quickly have a look. In particular, I am going to let's have a look at the treasury note 10-year note chart as well, but we'll just quickly go through the chart first. So here we can see both the 10-year note and the 30-year bond. They actually closed negative for the day. However, the treasury bond had a massive rally as well. Looking at the dollars, the dollar was weaker today, but not by a lot. I would say it remained just unchanged. So weaker is not probably the right word to use. And if you look at its mirror image, pretty much your USD, it was also unchanged in my opinion. The bigger thing to note is the USD/JPY, so the Japanese yen. This had been really strong over the past two trading days. So the dollar had been much stronger against the Japanese yen, but not today. It actually closed lower. Something to make a note of. And the British pound, it has been stronger compared to the euro for the past couple of trading days, and today was the same case. The metals, gold pretty much unchanged, and silver unchanged as well, but nonetheless they closed into the positive territory. Silver was much stronger with 0.8% gain today. Something which I've included now is also the energy sector, because in my opinion energy has started to move now. We have seen a move of one and a half barrel, $1.55 per barrel move to the upside in the light sweet crude oil, so CL, that's the future contract, or 2.14%. And another bigger move in my opinion, because of the possible trend change. In my opinion, the trend has changed for the natural gas. We'll take a look at that in more detail on the chart. So 2.04 percentage points. The S&P 500 cash index closed in the positive territory today. The ES E-mini futures as well, and the NQ, the Nasdaq 100 E-mini futures, were positive as well. And also yesterday the Dow Jones E-mini future was positive, but not today, and Russell 2000 was slightly negative as well. But some of these closed around or above the key standard deviation levels that we have been watching, and I'll show you the chart in a while. So let's go and take a look at and start with the treasury bond futures market. So let's go to, actually let's do the treasury note as well. Here we go. So what we are looking at is the daily chart of the Treasury 10-year Treasury note futures contract, and what we can see is that this is the bearish symmetry that has been in operation in this market, and again the market had risen to this much, and here it went into resistance. And what we are looking at now is this is a ratio which is 23.6%, which I hardly ever use, but the 38.2% was way below. And I was interested in looking at in stronger trending markets. Some of these ratios work really well. I really like the 38.2% Fibonacci retracement, but wanted to see what the market was doing. And what I can see is there is some structural support here, and the 23.6% Fibonacci just above that. But you can see that it's a negative close. We'll have to wait and see how the next few trading days will unfold. The Treasury bond futures 30-year even more interesting to watch, because this one has closed above its bearish uh, um, symmetry lines, so that's good. And also it went above the 61.8% Fibonacci retracement, but look, it's just been coming down for so many days now, and it went right into the 61.8% retracement from this low, and also the 23% retracement of this entire move was very close here. Now if the bonds are moving lower, the stocks do come under pressure, so we'll have to wait and see if the selling pressure in bonds will abate. So the bonds and the notes, they are much bigger markets than the stock markets, and so that's, and also this is the market where professionals come and play, and it's usually big money which is moving these markets. They're very huge, so to be able to move a market like this is when the ISM figures came out, and before that, this is the reaction when the non-farm payroll figures come out. So it's been a huge moves. It's been like a point move above, more to the upside, and then a point move to the downside. These are pretty big moves. And the other point that I wanted to spend some time on, I wanted to show you, because I'm not going to cover this in the weekend video, is look, we have this ABCD pattern formation taking place here. So this is the one-to-one price projection that we like to see, and it came right exactly pretty much to the actual figure of this 61.8% Fibonacci retracement. We just had a look at on the daily chart, and of course we have the 23% retracement just above that. So we have a confluence of two things and possibly three things going on around here. So there is a chance that this could be a pretty good support in the 30-year bond futures contract, which would then help if it begins to rise from this and try to resume its uptrend again. And the key thing would be to actually get above this 123.07 level. Then what it would mean is possibly also pretty good support for the stock market as well. As the old saying is that the stocks needs bonds, but the bonds don't need stocks. So that's a pretty interesting one, and we'll have to wait and see. And exactly, you can see when it rallied, it just went right to the 61.8% Fibonacci retracement. And let me actually also have a look at what this retracement was. And there you go. It was the 38.2% Fibonacci retracement. So again, a confluence of two ratios coming together here, and whenever that happens is something we pay close attention to. And it was pretty strong resistance for this market to break, and that's why we have seen pretty much a lot of these gains given back. Okay, so this is what we are looking at in the treasury bond, long bond futures market. Now let's go back and have a look at the dollar. So dollar index, again, a really interesting price action in dollar. If you remember, yesterday we were discussing that we had an inside bar, and this is the brown line, which we had drawn before as a possible resistance, where we were looking for some pullback to happen, which did happen with an inside bar. And then with the FOMC news coming out today, the market has filled this gap around here. And where did it go? It went right exactly to the 61.8% Fibonacci retracement of this high to low, and then also coming very close to, I would say it's pretty much there, of this 38.2% retracement of this entire swing high to low. So we have pretty strong resistance here. And if you also look, then the dollar is actually also moving in this channel formation. It could also be looked as a flag formation, more like a bear flag. So what it means is now, over the course of next few trading days, so next week is probably, in my opinion, really important for the dollar and the dollar index. If the market is able to break above the 102.90 level, or 103 even, if we like to just say, make it easy for us, then the chances are this in fact was just break out of this flag pattern, and we could have a pretty strong dollar moving higher. If it is not able to do that, then chances are it's going to go back right into this range and perhaps test these lows. And if it is able to convincingly break below this, especially the 99 level, then we are going to see a much weaker dollar, which is obviously going to help the gold and the precious metal markets. And that's the market which we are going to take a look at next. So this is the daily chart of the COMEX gold futures contract. And here, if you recall, subscribers who were watching our video yesterday, we had actually drawn this 61.8% Fibonacci retracement, and we were looking for this as a potential support to come in, also because of the structure, the ratio, and when we have also this trend line going for it. And this is exactly what happened when the non-farm payroll news came out. The figures were out. There was a knee-jerk reaction. The market retraced right to the 61.8% retracement, and then during the morning session of trading, gold was pretty strong, and then it just began to, as the stock market began to decline and the dollar also stabilized, it just began to gave up a lot of its gains. And if you look closely, what did it do? Where did it go? It went right to the 61.8% Fibonacci retracement. Let me just get rid of this once it's easier to see. So what we have seen is basically a range with a floor coming in from 61.8% Fibonacci retracement, a ceiling coming from, again, 61.8% Fibonacci retracement. Gold is a very technical market in the sense that these figures, the Fibonacci figures, they work really well with these and the pattern formation. So I think I am going to start to cover gold and precious metal in a separate segment. And also the energy, because with the kind of volatility that we are seeing in the markets and the way the dollar is moving, I think these markets need a separate segment of their own to be covered. Now, I'm not going to cover silver right now. Let's go to energy. So take a look at the crude oil. So the crude oil, something very interesting. This has been in a bear market for a long time. You can see that, somewhere around here I had a crude oil forming a bottom, and it did not. It just went into this big trading range, and it came back and tested the lower part of the range. And now what it is doing is something quite interesting. So here what we are looking at is this is kind of you can think of it as a wedge formation. It's not drawn like that, but it could be drawn something like this. So it becomes a wedge formation, and what we have seen is the market actually break out of it and then come back and test the lows of kind of where the actual breakout started. And something really interesting I wanted to show you, when we have a bearish move taking place, what the markets like to do is, in particular the crude, it is gonna go and test the old highs of our swing high. Either it's gonna go and maybe try to breach this, and then selling comes in, or it goes in the VIX of these candles, and somewhere around in the middle of it, maybe a little bit above it, or maybe sometimes even a little bit in the bottom 25% region, sometimes top 25 regions of the half of this region. I hope I'm making sense. And what it is doing on the when it is in a bullish move is kind of what the opposite of it. So you can see that this candle on the 3rd of January, it basically tried to take the lows of this candle out, rejected the price, rejected the lows, and we had a strong move higher. And then the next day we had a bearish trend or a bearish candle, and now we are actually breaking above yesterday's highs. So this is indicative that there's most likely higher prices to come, and in fact we might be doing an ABCD formation or one-to-one price projection formation, and we could easily be looking at $77.66 per barrel. Another market which is even more interesting is this natural gas market. So just to show you that this market has been in a really strong bear trend for quite a long time. It just stopped, sometime in 2022. Huge moves here, geopolitical stuff taking place, and here it formed this formation here, double top here, and it just market has been in a constant bear market for a long time, and then it's just been in a trading range, you can say, but it's pretty big, and it's just been a trend of higher highs and higher lows, and then a bigger decline which just broke all this trend. And where did it go? It went right to the 78.6% Fibonacci retracement. Now, in my opinion, what has taken place is because this swing was actually also taken out, in my opinion, there is a CIT, change in trend, and we should be looking at the market from the bullish side. However, there are some seasonal tendencies as well, and it is possible the pullbacks are possible. But what has happened today is that here yesterday we had a really nice breakout candle here, a bullish breakout candle, and today the market actually went and really tested the lows of it, and in fact might have even tried to take out the lows, which were 2.681, and today's low was 2.681. So exactly it matched it. So price rejected lower price, and it in fact went and took the highs out. That's bullish price action. So where it is likely to go, I've drawn these brown lines. That's gonna be pretty much, this is the 50% retracement. So it looks like the market is gonna go and probe this region, and of course we have this 61.8% Fibonacci retracement at 3.11, and we have this this trend line coming in here as well, which is likely to act as resistance level as well. So that's the kind of region most probably this market is going to go into, but of course no market move in a straight line. Maybe occasionally sometimes they do when they go parabolic rather. So this is what we are looking at, but we'll start to pay much more attention to the energy markets now, because they seem to be on a move now. So let's go back to our stock market, and here wanted to quickly revisit our little table. This is the table which I had shown at the start of the week when I'd done the weekly video, and what we see here are this is the VIX when it had closed on the Friday prior, and here these are the E-mini contracts, and the chart lays out the standard deviations. So we have the +1 standard deviation, -1 standard deviation, -2 standard deviation. So one of the key things is to note that the ES contract, for example, has just been hovering around the -1 standard deviation. It went a little bit below, so the territory of between -1 and -2 standard deviations. The Qs, the NQ, it also went below the -2 standard deviation, and that is something we need to pay attention to. However, it closed above that, so that's the key point. And then the YM, which is Dow Jones E-mini contract, has been much stronger, and also the Russell 2000 has been hovering around the -2 standard deviation, however closed a little bit lower. So these are the things, just to recap quickly. Now coming back to the charts, this is the cash index, S&P 500 cash index, and here there's a possibility it could move retrace to 46.31. So there's a possibility maybe there's some more downside to it. Key thing to note, it hasn't made a new all-time high, but in the ES contract it did. So the chances are that what we are looking at is perhaps a pullback, then it's likely going to go and make an all-time high in the cash index, and then we could have perhaps a bigger pullback sometime to the end of March, so to end the quarter. And the reason I'm thinking about this is because the data which is coming out could have surprises, and the investors might begin to think more about whether the Fed is going to be aggressively cutting rates or not. That scenario, and there could be a little bit of uncertainty. Perhaps that could be a reason, but I do not know. We just look at the technicals. Quickly taking a look at the ES. So what we can see is that again it's just closed right at the a little bit above the -1 standard deviation, and here is just around the 38.2% Fibonacci retracement as well. The Qs here, so the Qs, they went right into this box that we had drawn, and here again they closed above the -2 standard deviation level. So that's good, because going below or closing below would have been pretty negative. That did not happen, and because we have the E-mini, E-mini, S&P 500 E-mini and NQs at the -1 standard deviation, and Qs at the -2 standard deviation above that level, I think we are probably going to go for a bounce at least as next week, maybe early next week. It might happen maybe Tuesday, maybe Monday, Wednesday. We'll have to wait and see. But it looks like we are in the making of at least a bounce, and that bounce could get even extended, where the S&P 500 cash index actually go and make a new all-time high. And then we'll have to watch the price action really carefully. Okay, let's take a quick look at the Dow Jones E-mini futures. Look, it has this pattern we have been discussing for a long time now, and what we have seen is a muted price action in this index. So there's a possibility it might just go and try to even take this high out, or maybe just go into a trading range. But this index has been much stronger than for example, the NQs, which had actually been leading the market lower. And of course, looking at the RTY, which is the Russell 2000 small caps, this one has closed a little bit slightly below the -2 standard deviation, which is at 1974. But this has been a much weaker index. So again, we'll have to wait and see how the markets are going to trade, but looks like we might be actually preparing for at least a bounce to come in. This morning we did get a bounce, but again, in the afternoon session, there was quite a fair amount of selling that came in. The markets closed, some of the markets closed lower, but the good news is that the ES and also the S&P 500 cash index and the NQ, the Nasdaq 100 E-mini futures, they closed positive for the day. That's good. So with that note, thank you very much for watching the video. Apologies, the video is much longer. I covered a lot of stuff which I was going to cover for the Friday or the weekend video. I covered it today, so we'll cover some additional stuff instead. So thank you very much for watching the video, and if you like how we look at the markets here, then please do think about subscribing to the channel. And if you liked our video, how we do the technical analysis, then please also hit the like button. Thank you very much. Good luck and good trading.